Now and bring on board our guests. We have Kunal Bothra on the technicals. Saurabh Jain of SMC Global Securities joins us now on the fundamentals. Gentlemen, good morning. Kunal, let me go across to you. Expiry week, what do you have in your mind in terms of how we could be wrapping up this session? It's definitely a very a profitable one for the Bulls, the November series. What do you think is in store for December?
Well, absolutely, Gomina. So, good morning, first of all. I think it's been a tremendous November series for the markets, both in terms of the Nifty as well as on the Bank Nifty front. But I think today seems to be a bit of an off day. I would sense that it's more of a very muted kind of a expiry start, and this is atypical of what we've been accustomed to in the first half of the trade, because first half of the trade is generally very buoyant. It's full of activity, and you see a lot of stocks buzzing around. But I think today it's a bit different. So I would expect that maybe the rollovers, for major part of the stocks as well as for the indices, seems to be getting over. And I think the expiry or the the volatility which you typically see in the expiry day could be, I think, remaining for the last 1 hour, last couple of hours of trade today. So I think for the next couple of hours, I would expect a bit of a mutual price action, and then the prices could probably pick up pace in the last hour or so on the expiry day. Now, I also believe that there is a trend which is quite evident today, which is the mid-cap stocks, which are seeing some fresh buying today. So I would concentrate on two stocks in terms of recommendation for from the mid-cap space. First one is about India Cement. Now, it's very interesting because after that buoyant up move, the stock has seen from 130, 135 levels to almost the 155, which it tested I think 2 or 3 trading sessions back. It's starting to show some very positive signs on the short term as well as on the medium term aspect. So I would recommend a buy on India Cements from current levels, expecting a target of 165 plus. Stop loss could be kept at 148 mark. The second would be a buy on Polycab. Now, again, a very interesting chart. It's forming a classic, what we call as a bullish flag pattern on the daily charts. 945, 950 was the breakout level for Polycab of this bullish flag pattern. So above this, I would expect the stock to gradually move up towards 1000 plus levels. So a near-term target of 1000 plus on Polycab. Traders could look at a buy. Stop loss could be kept at 930 levels.
At Saurabh, hi, morning. What are your fundamental calls for our viewers?
My first pick would be RBL Bank. Good morning. The bank is, seeing a lot of traction coming in terms of growth. They are expecting credit growth to revive from Q3 onwards. They have maintained their capital adequacy ratio well and shown improvement in the net NP also. Recently, they have raised money approximately 1,500 crore to shore up their capital. We are expecting the stock to see price of about 265. The second stock that I would be recommending is Polycab only. The company is leader in the wires and cable segment. They are seeing good amount of traction coming in the FMEG segment. They are making headway into the electrical switch gears also. They are reducing their debts. In FY20, they posted good numbers. The management is quite confident of better days ahead. We are expecting about 1,030 rupees target for the stock.
All right, thanks for your picks as well. Request both of you gentlemen to stay on with us. We'll address viewer queries. I think, Saurabh, you've shared one idea with us. Is there another stock you'd like to flag off?
My first idea, and the second one is the Polycab. For the RBL, we are expecting target of 265.
Right. That's right. Okay, thanks for that. Slipping into a break here. Stay on with us. Kunal and Saurabh and also our viewers will address all your queries and emails on the other side. Stay tuned.
All right. Okay, well, that's, of course, about Interglobe Aviation. But it's time to bring on board the questions and queries that you guys have written in to us. So let's take our first question coming in from Lukesh Trivedi from Patna. He says that he purchased 150 shares of UPL. He bought this at 589 rupees per share. So it's he's losing a bit of money. Now he wants to know what's the short to medium term view for the stock price, if he should hold or exit. Now, Kunal, we have seen this stock actually come off quite a bit. There were concerns with respect to the whole KPMG quitting dilemma, etc. But this is the one stock that's actually not really done as well as its peers from those March lows that we saw on a comparative basis. Yes, it has definitely bounced from the March lows, but still, it's just well gone from 250 to 420 rupees. We've seen other companies do much better, especially from the blue chip Nifty names. So, what's your view on a UPL? And he particularly wants a short to medium term view.
So I believe that yes, Mumina, as you rightly flagged off, that the near-term trends are not encouraging for UPL. Now, look at it this way: in the best of the market times, and especially in the last 2-3 months specifically, when you have the markets roaring up, quite strongly, you would want all parts of the markets, and especially the benchmark index, to try and participate on the upside. So whether it's a late participation or early participation doesn't matter. But if a stock remains muted for such a strong and a vibrant market, it tells you that there is an underperforming. The undercurrent is still very I would say skeptical for the stock. Now technically, it's also not a comforting sign that the stock is below its 200 moving average. In fact, it broke below the 15-day moving average, I think, in the month of October, and since then the stock has been grinding lower beyond below that as well. So on the short term, on the medium term charts, it's not something which is encouraging. Now near term trends could revive only if the stock breaks above the 450 mark. 450 is the 200 moving average breakout. But I believe for that to happen, the stock needs to have some sort of a positive trigger, in terms of news flow, in terms of some event which is lined up. Till the time it doesn't happen, I believe that the stock could remain muted, could go into a downward trend, and could continue to languish on the downside. So I think the call has to be that you have to try and hold the stock or buy the stock only if it crosses about the 450 mark. Below 450 levels, I don't see any major trend picking up for UPL.
Okay. Saurabh, how are you reading into the fundamentals of the company? While Q2 performance was decent, the stock still continued to languish. There was also reports that SEBI had asked for further clarification after resignation of auditors as well, KPMG, from the Mauritius subsidy, but they haven't been able to sort of get clarity on that front either. So going by the fundamentals and the news flow that has been trickling in, what would be your advice for somebody holding on to UPS at such high levels?
I think some of the concerns you have highlighted are quite prominent. I mean, the auditor have resigned from the subsidiary, Mauritius subsidiary, which is a holding company for all the acquisition that company has made. And it is the subsidiary through which they have raised so much money. The debt on the balance sheet is close to 23,000 crore. That is also one of the concerns. So the UPL is not having best of the books, and the maintenance is not that great the way we see with the kind of banks like HDFC Bank and all. So this is one of the concerns which has come to the fore. I think because of this concern, the stock would continue to be would continue to underperform. I mean, when such concerns comes to highlight, nobody wants to put money. With respect to the operations, I think operations have been decent. The reported numbers have been decent. They have guided growth of approximately 6% in the revenues and bottom line growth of about 12 to 14%. But I think these concerns would continue to be there in very much in the market. My advice would be to get out of the stock and switch over to banks like ICICI or Axis.
Okay. Thanks, Kunal, as well as Saurabh, for joining in and helping our viewers with their queries. Unfortunately, that's all the time we can dedicate to that today. Slipping into a break here, more updates on the other side. Keep it with Buy Now, Sell Now.